Okay, we'll start. So yesterday's class we were into the discussion related to few aspects, and we need to do something in continuation to that. That is, we have started about input tax credit, and in that input tax credit I have just given you the introduction to input tax credit, and we have seen what is input tax credit about. That is nothing but GST paid on inward supplies which can be availed as ITC, and that can be utilized for payment of GST on outward supplies. And basically this input tax credit, so what happens is that at every stage, so there will be a taxation on the sale, but whatever we paid on purchases, that can be taken as credit. So because of which there will be saving to the consumer. Related to that only, I have given this illustration and I asked you to go through this illustration, which is in page number 11. And in this illustration, what has happened is that there are three dealers, A, B and C, and these three dealers are having some value addition of 100, 50 and 30 rupees, and the tax rate is given as 10%. So they are asking us to evaluate what happens if there is no credit system and if there is a credit system. So one of the biggest advantage that we have in GST compared to the earlier indirect tax regime is that in earlier indirect tax regime, we did not have that much of input tax credits available. So we were having a positive list, like these cases only we can take ITC, but in GST what has happened, we have a negative list, which is like except this, in all other cases we can take ITC, and this is what we call it as blocked credits. So except in case of certain inward supplies we cannot take, but all other cases we can take ITC. So that's how we have at present in GST. So compared to earlier system in GST, the availment of ITC is on large number of inward supplies, that is more credit is available. And suppose if the credit is not available, you can see the first table there. So dealer A is selling at 100 rupees and the tax will be 10%, that is 10 rupees. So dealer A is collecting how much from dealer B? 110. Now you are dealer B, step into the shoes of dealer B. As a dealer B, how much you paid to dealer A? 110. But can you take credit? You cannot take credit. So what happens to the cost? Cost will be 110. And what is the margin made by dealer B? 50 rupees. So you can just look into the table over there. So you just listen to me and look into the table. So dealer B is having a cost of 110, and what is the value addition made by dealer B? 50 rupees. So 110 plus 50 rupees, that will be 160, and on that 10% will be 16 rupees. So 176 is collected from the dealer C, and dealer B cannot take ITC of 10 rupees. Due to that reason, how much GST dealer B will pay to government? Entire 16 rupees will be paid to government. And dealer C, you are now dealer C, you are making a purchase from dealer B for 176, you cannot take credit. And what is the margin of dealer C? 30 rupees. So 176 plus 30 rupees will come to 206. On the 206, 10% will be what? 20.6. So how much you collect from your consumer, your dealer C? How much you collect from your consumer? 226.6 is what you collect from the consumer, and you pay how much to the government? 20.6. Now if you see in this, what is the cost to the consumer? 226.6. What is the revenue to the government? 46.6. Dealer A will pay 10 rupees, dealer B will pay 16 rupees, dealer C will pay 20.6. So 46.6 is the tax revenue to the government. But the effective rate of tax, if you see, it's not 10%. How? So dealer A added a value of 100, dealer B added a value of 50, and dealer C added a value of 30. So total is what? 180. On 180, actually 10% is 18 rupees. But how much is being paid to government? 46.6. Means the effective rate comes to beyond 10%. Somewhere like 25% is what we are required to pay. And in this entire process, who is the advantageous party? Government. And who is the disadvantageous person? That is the consumer. So to avoid this kind of scenario, because what happens if it continues this way? So every person will not be willing to pay that much amount as tax. See, without tax, it is 180. With tax, it is 226.6. It's a huge difference. So now you are a consumer, you go to a shop and the shopkeeper is telling, boss, with bill 226.6, without bill 180. What you prefer? 180, definitely without bill only, correct? So because every time I go to the Saukarpet, Goindapan, Icon Street and all, so two bills will be there. Okay, so that is one trade area, you all know that. So there, any shop, any wholesaler or retailer, they will be telling, sir, this is with bill, sir, this is without bill. like two different pricing will be there. So definitely I will prefer without bill, because why should I pay tax is what everyone will think when the tax is huge. So that will lead to the black money, and this they have realized, and they have brought in the credit long back. So in this credit system, what happens, you can look into table number 2. So in that second table, you can see if there is a credit system, dealer A, there is no difference, because dealer A is the first person in the transaction. So therefore 100 rupees plus 10 rupees, 110 rupees he will collect from dealer B. But dealer B, what will be taken as cost? 100. Why dealer B's cost is 100 rupees? Because the 10 rupees he can take as credit. Due to that reason, his cost will become 100, and he will make a value addition. What is the value addition made by dealer B? 50. So the price will automatically come down to 150. In the same way, like previous table, if you see, it was 160, correct or not? So now it became 150. On that 150, 10% will be 15, that is 165 is what dealer B will collect from dealer C. But how much dealer B will pay to government? So how much dealer B collected from dealer C? 15 rupees towards the tax. In that 15 rupees, 10 rupees already paid at the time of purchase. While discussing yesterday the input tax, I told you, so input tax is nothing but recovery of our investment which we have made at the time of purchase. So 15 rupees we got. In that 15 rupees, 10 rupees already paid at the time of purchase. So what is left with us? 5 rupees. That 5 rupees we are giving it to government. So therefore, how much is the GST paid to government? Only 5, which is nothing but output tax minus input tax. Now again dealer C is paying 165, but his cost of purchase is only 150. Why 150? Because that 15 rupees can be taken as credit. And 150, what is the value addition made by dealer C? 30 rupees. So 150 plus 30, 180. On the top of that, 10% will come to 18 rupees. Now dealer C will pay only 3 rupees as GST. Why 3 rupees? 18 minus input tax credit is 15. So therefore 18 minus 15, 3 rupees they will be paying as GST to government. And what about consumer? What is the cost to the consumer? 180 plus 18, that is 198 rupees. Now if you compare between these two tables, see the previous table. What is the cost to the consumer? The cost to the consumer is 226.6. Now what is the cost to the consumer? 198. What is the difference? How much the consumer is saving? 46.6, correct? 226.6 minus, that is 28.6. 226.6 minus 198, that is 28.6 is what consumer is saving. Same way, look into the previous table. What was the revenue to the government without credit system? 46.6. Now what is the revenue to the government? 18. That 18 is actually on the value addition. 180 into 10%, 18. So how much government is losing? 28.6. So that is in a nutshell, how much ever government is losing its revenue, that much is contributed to the consumer by way of reduction in the price. Okay. So therefore, because of GST, what was the expectation? The price of the commodities will be coming down. So that was the expectation. But the reality is completely different. What happened in reality is that, so people did not reduce the price. So if you look into the third table, you will understand. Dealer B thought, anyhow dealer C was ready to pay 176 rupees, correct? Dealer B was anyhow ready to pay 176. Why should I charge him 165? Because today in the market there is a mentality that if you reduce the price, the quality is not good. So if you are maintaining a lowest price, no problem. But when you were maintaining a high price, automatically when you reduce the price, so the consumers are thinking that, the quality is cheap. So because of that only they are reducing the price like that. So dealer B don't want that to happen in his case. So therefore dealer B is telling, anyhow my customer, dealer C, was ready to pay 176. So why should I charge him 165? So I will charge only 176. By charging 176, what has happened? His profit margin will increase. How his profit margin increases? Just look into there. In the third table, 176 is collecting from dealer C, and in that GST is inclusive, 10%. So 176 into 10 by 110. Why 10 by 110? Inclusive of GST. So inclusive of GST into 10% divided by 110. So is 16 rupees. So 176 minus 16 is what? 160. But what was his cost? 100 because he is getting input tax credit. So 100. So 100 and 160, what is the value addition made by dealer B? 60 rupees is the value addition. But what was the value addition that he was making so far? 50. Now all of a sudden, he is able to make a profit of 60, 10 rupees extra. Same is the case with dealer C. Dealer C thought, anyhow consumer was ready to pay me 226.6. Why should I undercharge him? So he also fixed the same price and inclusive of GST. So 226.6 into 10 by 110 will be 20.6. So the remainder 180 and that is how much? 226.6 minus 20.6, 206. 206 and 160 is the purchase price. Why 160 is the purchase price? So 176 input tax credit is available. So therefore 46 has become the value addition. Previously what was the value addition of dealer C? 30. Now it went to 46. Now this is the reality that has happened. The traders or the people who are involved in the supply chain has not transferred the benefit of ITC to the buyers, thereby the price not got reduced, they retained the same price, because of which their profit has increased, and this is known as profiteering. You understood what is this term known as? Profiteering. So what is profiteering? Not passing on the benefit of ITC to the buyer. By retaining the same price, your profit will increase. So this is known as profiteering. To avoid this profiteering, what government did, so they need to counter effect this na. So they have started an anti-profiteering authority. So that anti-profiteering authority has not worked well. So had it done the job perfectly, so definitely we would have seen a good decrease in the price, but they were not effective. And they continued this anti-profiteering authority even today, and the provisions relating to this anti-profiteering etc. and all, we will be learning at a later point of time in the last chapter, that is miscellaneous provisions. There we will be learning. It is just the introduction which I gave you about what is profiteering and anti-profiteering etc. But even today anti-profiteering is continuing, but by a different authority called as Competition Commission of India. In the past, there was a separate authority called as NAPA, National Anti-Profiteering Authority. Now they changed it to Competition Commission of India, and more details about that we will be learning in future point of time. Okay. So that is about, in order to avoid this scenario, government has introduced anti-profiteering provisions. So we are not discussing anti-profiteering provisions now, which we will be seeing later. Okay. Then next one, GST Council. So look into GST Council. Who is GST Council? So why there is a need of something called as GST Council? What is the model that we are having with respect to GST? Dual GST. In dual GST, who is having power to levy? Central government and state government, which means the decision making should be given to both CG and SG. So CG alone cannot take the decisions, or SG alone cannot take the decisions. And one of the advantage of GST is that there will be uniform tax rates across the country and the uniform tax practices across the country, so that there will be an element of certainty with respect to the compliance mechanism. In the old indirect tax law, if I am having business in multiple states, for different states I need to follow different processes. But now I don't have to do that. I can follow the same process with respect to compliance, so that there is an element of certainty. So that's why there is a uniform decision making that should be done. So to meet that objective of uniform decision making, they created this GST Council. So wherein this GST Council is not a government authority. Basically what happens in government authority, the moment government dissolves, the government authority also dissolves. But GST Council is a constitutional authority. And who will be present in this GST Council? Neither Prime Minister nor the Chief Ministers. It is the state representations, wherein the state finance ministers will be there na. So those finance ministers, plus for union, there is a union finance minister and minister of states. So for representation of the finance. So these 33 members will be present in the GST Council. How 33 members? How many states do we have? 28 states, plus 3 union territories are considered as states. Already we saw that. What are those 3 union territories? Delhi, Puducherry and Jammu and Kashmir. So 28 plus 3, 31. For 31 states, there will be a representation. So therefore, 31 state finance ministers plus 1 union finance minister plus 1 minister of state representing the finance. So therefore, 33 members will be there in the GST council. And these 33 members take any decision, that decision so will be given as a recommendation to the central government and state government, and they will implement it into the respective GST law. Why I say respective GST law? As we have many GSTs, so we have multiple acts. So CGST, we have CGST Act. And for SGST, we have 31 SGST Acts. Each state is having a separate SGST Act. And UTGST, one UTGST Act only for all the 5 union territories which are without state legislature. One UTGST Act we have and one IGST Act we have. So we have multiple enactments for GST. So now, whatever decision that is taken by the GST Council will be given as a recommendation to center and states, and they need to incorporate that into their respective GST law. Is it clear? And this GST Council is constituted by President. As I already told you, it's a constitutional authority. So which article gives power to the GST Council? Article 279A of the Constitution gives the roles, responsibilities, powers of the GST Council, and it empowers President to constitute the council, Article 279A. And who is the chairman of this council? Union Finance Minister. Union Finance Minister is its chairman, and finance ministers of the state shall be its members, and even Union Minister of State in charge of revenue. That is, usually for every cabinet ministry, there will be Ministry of State. So that Ministry of State for Finance is also member, and basically it makes recommendations to center and states on important issues. What are those important issues? Like what are the crucial decisions related to GST? Tax rates. So what rate should be fixed for what product, whether we need to revise it, reduce it, enhance it, etc. And thereafter exemptions. From time to time, certain goods and services needs to be exempted, and those which are already exempted, so should be brought into the taxability. And then process like procedures, return filing procedures, etc. So there are many cases wherein GST Council will give recommendations. So all those areas. So tax rates, exemptions, dispute resolution, etc. Basically, GST Council is a decision making body of GST, and it is headed by FM but not by President. It is not a board but a constitutional authority. Already we have seen. Total how many members will be there in GST Council? 33 members, and the quorum is 50%. 50% means when is it called as a valid meeting? How many members should be present? 33, 50% is what? So 18, 17.5, 18 members should be present in the meeting. Then only the GST Council meeting is called as a valid meeting. And in that meeting also, central government is having only 1/3 weight for the vote. Means central government vote will not be given equal weightage to the state government vote. So central government vote will have 1/3 weight, and state government vote will have 2/3 weights. Okay. So the weighted votes are 1/3 for CG and 2/3 for SG, and decision is considered to be passed if 3/4 weighted majority is obtained. So how much majority is required? 3/4. So like a special resolution majority. So now needless to talk about the majority, because we are seeing daily. So what is simple majority, what is weighted majority, etc. But in a way, I don't want to blame only the Union Finance Minister. So because actually today whatever we are seeing in this GST, etc. and all, so we don't have to blame only the Union Finance Minister. Reason being, Union Finance Minister's vote weight is only 1/3. Means whatever GST provisions that we are seeing today majorly is contributed by the state finance ministers only. If they have decided something, that would become the law. So therefore, we should not only blame union finance ministers, but should also blame the state finance ministers. That's what I am conveying. And I said it as 18, sorry, it is 16.5, 17, sorry. So 33, 16.5, that is 17 is the quorum that is required. I gave an example there, have a look into it. GST Council meeting. So who participated in this meeting? One union finance minister, one union MP, I told you minister of states, and then 17 state finance ministers. So what is the total weighted votes? So CG will have 1/3 and SG will have 2/3. So therefore 1 into 1 by 3 plus 1 into 1 by 3 plus 17 into 2 by 3. So what is the total weighted votes? 12. Now what is the decision? There is a proposal. The proposal is to increase the rate of GST on smartphone from 18% to 28%, because now a lot of people are using smartphones. So why can't we increase? Because usually every time government thinks that way only. There is a budget requirement and there is a revenue. So now there is a deficit. Say we have some 20,000 crores as spending and we have only 18,000 crores as the budgeted revenue. So there is a deficit, budget deficit of 2,000 crores. Now the 2,000 crores the government has to earn. How they will be able to earn? They will be increasing the tax rate. Income tax? No, we cannot touch income tax. So reason being, so income tax already the decision they have taken, and the rates and all they will not usually touch. Maybe the corporate tax alone, that rate they may revise, that minimum alternate tax or the corporate tax, that they will revise. But majorly it is the indirect tax their focus will be. In indirect tax also they will see where the dependency or in which product or service more number of people are consuming. So on that they will increase the rate so that their deficit, budget deficit, they will be able to get. Best example to say is the last year situation. So what has happened is that there was a deficit in the budget and restaurants were brought into the e-commerce operators liability to pay GST. Previously Swiggy, Zomato, etc. were not covered under the taxability. So maybe at intermediate level you would have studied section 9 subsection 5, where the liability to pay GST is on e-commerce operator with respect to some notified transactions like housekeeping services, accommodation services and transportation of passenger services. So basically housekeeping example, this urban company, and accommodation example, this Oyo, GoIbibo, Make My Trip, and transportation of passengers example, this Ola, Uber, Rapido. So these people were only covered wherein they have to pay GST, neither the supplier nor the recipient. So basically these aggregators, when they pay tax, so the supplier may not be really having that much of turnover, so they may not be registered also. So but what has happened, when the aggregator is paying the tax, so every transaction is now covered into the taxability, so the revenue will be increased. Same way they brought in the restaurants also into this picture. For example, there is a small restaurant which is having an annual turnover of some 10 lakhs to 15 lakhs like that. Are they required to register? No, because you all know what is the threshold limit for registration in GST? 20 lakhs. 20 lakhs is the threshold limit, and if you are exclusively engaged in supply of goods, then it will go to 40 lakhs. But basically I am talking about restaurant, which is a service sector, so the threshold limit will be 20 lakhs. Now whenever the 20 lakhs crosses only, they need to register. Only when they register they need to pay tax. Now there is a restaurant which is having a turnover of 10 to 15 lakhs, they are not required to register, so they will not be charging any GST. But with the advent of this internet and e-commerce operator, even that restaurant which is making 10 to 15 lakhs will also be willing to supply food through e-commerce operator. Will you agree? So because the moment we get the cravings to eat food, we open Swiggy or Zomato and the first thing that we see is the price. Am I right? So price, it should be pocket friendly, and then only we will be ordering. And definitely big restaurants will not be making the price as pocket friendly, only small restaurants will do, and we are dependent on those restaurants to a greater extent. Previously, there was no tax on them. Why no tax on them? Because they were not registered. The moment it is brought into e-commerce transaction liability, what has happened? Even though the restaurant is unregistered, but the e-commerce operator required to pay tax on that. The restaurant may be a small restaurant. The moment they start selling food through Swiggy or Zomato, on that food there will be tax. Now you understood the way in which they try to recover the revenue. So whenever there is a dependency on one particular product or a service, so automatically tax will be levied on that, or they will increase the tax rate on that particular product. That's how they will be able to fulfill the deficit in the budget. Okay. So like every time when the budget is announced, you know how my reaction will be. It's like, why are they announcing this many schemes? You know, basically I like this socialism, communism, etc. and all, but in a way we should not announce too many schemes. When too many schemes are announced, the public expenditure keep on increasing. When it keep on increasing, the revenue is not going to increase. So definitely the deficit will happen. So in turn, the taxpayers, of course, everyone is going to get affected. So that is the problem that is happening. So freebies, you know, freebies are really dangerous to the economy. And coming back to this, so something has happened like that. So now they want to increase the tax rate from 18% to 28%. Now, how many voted in favor? Union Finance Minister definitely will vote in favor, because I told you the reason. Problem is there. So they have to fulfill the deficit in the budget. So Union Finance Minister will vote in favor. Union MP also will vote in favor, because definitely, you know, ruling government only, na. Then 4 state finance ministers only voted. Maybe whichever state where the central government is ruling, those finance ministers has to listen, so they voted. But the remaining, those who were present in the meeting, did not vote in favor, so they voted against. Now, what is the weighted votes in favor we need to see? So 1 into 1 by 3 plus 1 into 1 by 3 plus 4 into 2 by 3. What is the weighted majority here? Weighted, that is total weighted votes in favor. So 1 into 1 by 3 plus 1 into 1 by 3 plus 4 into 2 by 3, that is 3.3 is only the weighted votes in favor. What is it total weighted? 12. 3.3 divided by 12 into 100. What is 3.3 divided by 12 into 100? 27. But how much majority required? 3/4. You understood? So here it is just 27%. So will the proposal be accepted or dropped? Proposal will be dropped. You understood? This is how the voting happens. But this example is just for explaining you as to how the voting works. But what are the key points that you should know is that the quorum is minimum 50% and there is a weighted vote CG 1/3, SG 2/3 and 3/4 weighted majority is required, and there will be 33 members. Then what are the areas of recommendation by GST Council? So already we have seen in brief, that is taxes, tax rates, and then exemptions from GST. So taxes, cess and surcharges subsumed under GST, what and all should be brought into the GST. Exemptions and determination of threshold limit. Yes, I told you 20 lakhs. In case of goods means it will be 40 lakhs. Again, in case of composition scheme, applicability it will be 1.5 crores or 75 lakhs. Sometimes in case of northeastern states, like special category states, it will be 10 lakhs, like that. For which state what should be taken as the limit, that is also decided by them. And model GST and principles of levy and apportionment of GST. What is this apportionment of IGST? Apportionment of IGST arises in a situation where I have CGST credit and SGST credit, but I have IGST liability. So in this case, I will use my SGST credit for payment of IGST liability. So I'm just giving you one example to understand. Say this, situation 1. No need to make note, just listen. Situation 1, I have an inward supply, that is purchase, and this inward supply is intrastate. So within the state. So within the state means what is the GST that I would have paid on purchase? CGST and SGST. So CGST credit and SGST credit. Then on my outward supply, which is interstate, my outward supply is interstate. So what is the liability that I have? IGST payable. This IGST is payable to whom? Central government. CGST credit I have means that reached which government? Central government. SGST credit I have means that revenue, that money would have reached which government? State government. Now, I have a CGST credit of 10,000 and SGST credit of 5,000. I am using this 10,000 and 5,000 for payment of IGST liability. Clear? Now, 10,000 is with whom? Central government. I am paying to whom? So literally there is no settlement required. It's like you are my debtor, you are my creditor. I need to get 10,000 from you, I need to pay 10,000 to you. So set off. So which means there is no need of any settlement. Whereas in the second case, if you see, 5,000 rupees is with which government? State government. And that 5,000 I am paying to whom? Central government. Literally I am not paying, I am just doing the set off. So my debtor is state government. My debtor is state government for 5,000. My creditor is central government for 5,000. When I do the set off, then the debtor has to pay that money to the creditor, na? So in this case, SG shall transfer, because when we do the set off, so we will come out of the transaction, but the settlement, actual settlement should take place. So SG shall transfer how much? 5,000 to whom? To CG under IGST settlement. Under IGST settlements, and state government will transfer 5,000 to central government. Then another situation we will see. In this situation it is reversed. So what happens in the first situation? When we use SGST credit for payment of IGST liability, state government will transfer that much amount to the central government. Then situation 2. Situation 2 is reverse. With respect to my inward supply, it is inter. Inward supply is inter, whereas outward supply is intra. When the inward supply is inter, what is the credit that I have? IGST credit, which means this money is with which government? Central government. And when our outward supply is intra, CGST payable to central government and SGST payable to state government. So we can use IGST credit for payment of CGST as well as SGST. Say I am using 10,000 for payment of CGST and 5,000 for payment of SGST. Now in this case, first CGST when I am using, already I need to get 10,000 rupees from central government and I am paying it to central government only, so there is no settlement. Whereas 5,000 rupees you see, when I do IGST credit for payment of SGST payable, so IGST credit means I need to get that 5,000 rupees from the central government, which means central government is my debtor and I need to pay 5,000 rupees to the state government. So state government is my creditor. So when I do the set off, who should transfer what amount to whom? Central government should transfer 5,000 rupees to state government under IGST settlement. So previously state government transferred. So now CG shall transfer 5,000 rupees to SG under IGST settlement. Okay, so what are the two situations where the IGST settlements will happen? When SGST credit is used for payment of IGST liability and IGST credit is used for payment of SGST liability. Now, so which government will pay to which government? SGST credit used for IGST. So you tell me, whichever credit we are using, that government is going to pay. So SGST credit used for IGST means who will pay to whom? State government will pay to central government. When IGST credit is used for payment of SGST, central government will make that payment to state government. So this is what basically IGST settlement is. Now, this will contradict with my yesterday's discussion. IGST 50% will go to the consuming state. I said something of that sort, correct? So what is the difference between this and that? Now, it depends upon whether my outward supply is B2B or B2C. What is B2B means? I am making sale to a registered person. What is B2C means? I am making sale to a unregistered person. So logically, please remember, I am seller, you are my buyer, and it is B2B. It is B2B. So interstate. So you have IGST credit. Now in this case, 50% will not go to the consuming state. Is it clear? Seller, buyer in a different state. IGST, I will pay to central government. Central government will not distribute 50% to the consuming state. Why? Because the recipient is registered. Sir, how government will know that the recipient is registered? How they will know? Because this transaction I will report in GSTR1 under B2B transaction. GSTR1 is a return which is required to be filed by every registered person under GST, mentioning the details of outward supplies. So whatever my outward supplies, I have to report in GSTR1. And in that GSTR1, if it is a B2B transaction, what is B2B? Sale to registered person, I have to report it invoice wise. The moment I report invoice wise, government will know that it's a B2B transaction, so they will not distribute that 50%. So then what they are going to do? Now see boss, you have taken IGST credit now. What you are going to do with that IGST credit? You will set off with CGST liability. So that money will fully go into central government. You got it? You are using IGST credit to set off against SGST liability. So that money will go to state government. Understood or not? Clear? How my recipient is going to set off the IGST credit with what liability like this? Accordingly, the movement of money also. Suppose if the sale is to an unregistered person, how government will know that the sale is to unregistered person? Because in the same GSTR1, B2B transactions, how I report invoice wise, B2C transactions, I will do consolidated, state-wise consolidation I need to do. Are you understanding? So when I do that, so government will know, central government will know, okay, boss, this is a B2C transaction. So 50% they will be giving it to consuming state. Got the clarity? So IGST settlement will happen mainly with respect to which type of transactions? B2B. B2B, this IGST settlement. Whereas that 50% sharing will happen in which cases? B2C transactions. Clear? And who is going to do this IGST settlement? Again, apportionment of IGST, all the rules related to that will also be decided, like how it will be happening, etc. will be decided by GST Council. Determination of GST rate on goods and services, including the special rates. Special provisions for these areas. So these are called as special category states as per Article 279A of the Constitution. So what are the special category states as per Article 279A of the Constitution? Jammu and Kashmir and northeastern states, all northeastern states, Himachal Pradesh, Uttarakhand. You just write over there M-M-T-N A-SAM H-U-J. MMTN is Manipur, Mizoram, Tripura, Nagaland. Then A, Assam. Then S, Sikkim. Another A is Arunachal Pradesh. M is Meghalaya. So basically this Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim, Arunachal Pradesh and Meghalaya are the northeastern states. Then H, Himachal Pradesh, U, Uttarakhand, and J for Jammu and Kashmir. These are considered as special category states. Special category states as per constitution. So as per constitution they have been given a special status. And right now Andhra Pradesh has also asked for special status. So that was one of the demand for supporting to NDA. Okay. So that's the latest news. So if NDA supports, like if they need, actually that's a situation. So two people is playing the role here. So one is Naidu of TDP from Andhra and another is Nitish Kumar from Bihar. So these two people have placed a big list of demands, and of course, so they may not be satisfying all the demands, but they, if they do, and if they tell like, okay, Andhra Pradesh we are notifying as a special category state, then in the list Andhra Pradesh also will come. Otherwise, so far it is not there. Okay. So these are the only states which are considered as special category states as per constitution. Then next, GST network. GST network, basically whenever there is a interaction between the taxpayers and the government, what is the point of interaction? So there is a information technology requirement is there. So that information technology infrastructure for interaction between the taxpayers and the government, central government, state government, is this GST network. So this GST network basically is a special purpose vehicle, basically an entity that has been set up to provide shared IT infrastructure to whom CG, SG, taxpayers and other stakeholders for implementation of GST, and commonly it is known as common portal. And where is this common portal hosted? gst.gov.in. What are the functions of this GST network? So whenever you want to do registration, that registration will be done through GST network. That is, if you want to get registered under GST, it will happen through GST network, and payment of taxes, and they will forward the return. So even we will file the returns also in the portal, where it will be forwarded to CG and SG, and computation and settlement of IGST. Just now we saw this now, how the computation will happen. So this computation and settlement will be done by them, and then matching of credits, reversal and availment. So this matching of credit is something which is so torturous that in GST that we have right from the beginning in 2017 till today, this matching of credit is a big challenge. So people are not able to agree to whatever government is telling. So I just wanted to share a piece of information related to this. What is this matching of credit? So you all know this, but just as a revision, I am just telling you this. That is, in the VAT system itself, credit was there. So GST, they didn't bring any credit newly, it was there in VAT regime itself. But the major problem in the VAT regime was fake invoices. Every trader used to have lot of fake purchase invoices, and they will say we have this much credit. And tax officers were unable to verify the authenticity of these tax invoices. And these people will just do the printing of invoices, and they will say we have made the purchases. But how to cross check whether this is real or not, whether it is genuine or bogus? So tax department disallowed the credit many instances, and this traders association and all went to the court. In many courts writ petitions were filed, and the High Court has given the decision in favor to the trade association, stating that how can you deny the credit to them? So the credit should be given, because the trader's argument is simple. What is the method of verifying whether it is a genuine invoice or a fake invoice? Sir, I am sitting in my shop, sir. One seller is coming to my shop and he is selling the goods. I made the payment. He gave me invoice. How will I check? Is it a currency note? So that I will take like this and check whether it is genuine or fake. So how can I verify the invoices? So they won. That was the basic discussion this, lot of states were having, that gave the lead for GST. And in the GST, the basic fabric of difference between the earlier tax regime and the GST is this matching of credit. Now they are telling every purchase invoice we need to track with the sales invoice of the other person. And if the other person has paid the tax, then only we will give credit to you. This is the simple thought process with which they started. You are purchasing something, you have a purchase invoice, we want to verify this purchase invoice against the sales invoice of another person. If the other person has really paid the tax, then we will give credit to you. So thought was good and clarity is also there, but implementation, how to implement it. So how these invoices can be cross verified, etc. So beginning it was a different system, and at present, so there is a different system. So at present we will see what has happened with respect to this matching of credits. So there are 3 returns which we need to know: GSTR1, GSTR2B and GSTR3B. Every registered person is required to file these 3 returns. GSTR1 contains the details of outward supplies. GSTR3B contains the details of outward supplies, inward supplies, input tax credit, gross liability, everything will be there. It's in a way a consolidated return. Now, GSTR2B is something which you will not file, but it will be made available to you based on your supplier GSTR1. You are making purchase from 10 suppliers. Those 10 suppliers will be filing GSTR1. So based on the supplier's GSTR1, so they will mention your name as the recipient. So the portal will make available to you a statement called as GSTR2B. That GSTR2B contains the details of your inward supplies. Only those inward supplies you will be able to take ITC. So this is the present system which we have. Okay. So what is called as matched ITC? That ITC reflected in GSTR2B. So what is matched ITC? Come on. That ITC which is reflected in GSTR2B. How it will be reflected in GSTR2B? Based on GSTR1 of your suppliers. Okay. Now, why will there be a mismatch between the ITC as per your books versus the ITC as per GSTR2B? Can you tell me? Supplier? Not filed GSTR1. Super. So if the supplier has not filed GSTR1, it will not be coming in 2B. Consequently, in your books the credit will be there, because the moment you purchase you will pass the entry and the credit will be there in your books, but it will not be there in 2B, because of which you cannot take credit. Then any other reason? Huh? Okay, so not filed in this due date. So the due date has been crossed. So GSTR1 filed, but after due date. As it is filed after due date, it will not be coming in this month 2B. So it will be coming in the later month 2B. Okay, next. Error. Error. That is, filed GSTR1, reported the details of the recipient, but there is a mistake in that, like number, value and the tax discrepancy, or instead of reporting as B2B, they have reported it as B2C, etc. These are some errors, because of which also it will not be coming in your 2B. Correct? So number 1, GSTR1 not filed. Number 2, GSTR1 filed but invoice not reported. Number 3, GSTR1 filed, invoice reported, but there is a mistake. Number 4, GSTR1 filed and everything is perfect, but it is filed after the due date, because of which it will not be coming and we will not be able to take ITC. Again, this information we will discuss in detail in input tax credit chapter. So basically in this introduction chapter, we are understanding the foundation of each and every concept. So each and every concept again in detail we will be learning at the different chapters. Okay. So that is about this matching, all these things. It will be taken care by the GST network, and also matching of tax payments with the banks. Even invoicing is now done in the portal itself, e-invoice. There is a concept of e-invoice, electronic invoice, wherein we need to upload our regular invoice into the portal and get the invoice reference number and all, and IRN. So this invoices will only be considered as authentic invoices, and even MIS reports to central government, state government. So these are the various functions of GST network. Then, is GST network a government entity or a private entity? Initially it was started as a private entity, public private entity, but now it is a 100% government owned entity, wherein 50% is owned by central government and 50% by all state governments together. Okay, and these are the various aspects that we need to know in the introduction. And the remaining things, as this chapter is not there in syllabus, so you don't have to bother about all those other things and all, okay, but I have just given everything whatever is there in the study material. So if you see this first page we have discussed, and this is generic information, and milestones on implementation of GST, this already you know. So with effect from which date GST is implemented? 1/7/2017. And before implementing GST, there was a requirement to amend the constitution. Why to amend the constitution? I told you, union list, state list. So when both central government and state government needs to make law, we need to amend the constitution 7th schedule. So that amendment bill was presented in 2014. 2014 is the date on which bill, like year in which bill is presented. But the Constitution Amendment Act happened in 2016, not 2017. 2016 is a constitutional amendment, and 2017 only GST is implemented. And France is the first country in the globe to implement GST. And thereafter we have seen this, what are the various union territories and how the taxes got subsumed, intrastate, interstate, all these aspects. And then look into GST compensation cess, page 15. Already I gave you the background for GST compensation cess. So what is the purpose of this GST compensation cess? Before that, one general knowledge doubt. What is the difference between tax and cess? Tax versus cess, CESS. Tax is on income, cess is on expenditure. Cess is on tax. No, compensation cess is not on tax. Compensation cess is also on the value. That's what example I told you yesterday. Car is 10 lakhs, 28% is GST on 10 lakhs. Compensation cess is 22% again on 10 lakhs. So cess, income tax cess may be on tax, but not necessary that every cess needs to be on tax. No. Anything else? Good. Cess is for a specific purpose, whereas tax is generic, that can be used for any purpose. Tax money can be used for construction of temples, statues, bridges, dams, for public welfare also. Okay. So whereas cess, whenever it is collected, for the purpose for which it is collected only it should be used. Example, GST compensation cess. Using GST compensation cess, can we construct Ram Mandir? No, cannot be constructed. It should be used only for the purpose of payment of compensation cess. You understood? So, sir, are you against? No, nothing like that. Generic, okay, general knowledge only, okay. No favor, no against, nothing. So, just I am telling. And so even they construct statues and all also with the taxpayers' money. So, but again, can the compensation cess be used? Can the health and education cess be used? No. There is a purpose for which it is collected. For that purpose only it should be used. Okay. Then what is the difference between tax and duty? Because we have customs duty also, na? See, basically duty is like whether you are making an economic activity out of that or not, you have to pay. You are importing goods for your own consumption. For your own consumption, you are not going to make any economic activity, you are not going to resell, etc. For your own consumption. Are you required to pay customs duty? Yes. Yes. And Tax is not like that. When we do certain things for our own consumption, we are not required. For example, I know construction. I constructed my house. Should I pay GST? No. So I may teach GST to my kid. Okay. Should I pay GST? No, not required. Are you understanding this? So basically, is there an economic activity involved or not is what we see in tax. But in case of duty, it is not like that. The moment you import it, the moment you exported it, even though it is like you are not generating any revenue, etc. out of it, you have to pay. That is what duty versus tax basically is. Okay. Then, so compensation cess. What is the purpose for which compensation cess is collected? To compensate states on account of implementation of GST if there is any loss of revenue to the states. So read the first paragraph. What is the objective of compensation cess? Okay. And this compensation cess is levied only in those states where they want to give compensation, or are levied across the country? Across the country. See, compensation cess is to compensate the states for loss to the state. Now, whether this compensation cess is levied on only the people in that state or across the country? Across the country. So the applicability is entire country including Jammu and Kashmir. And this point already I told you. What is the period for which compensation cess will be levied? 5 years from the date of implementation of GST. And can it be extended? Yes, it can be extended for a further period as and when the GST Council decides. And accordingly, it has been extended up to 31st March 2026. You can see that information in the next page. However, with effect from 1/7/2022, the period for levy and collection of compensation cess has been extended up to 31st March 2026. Then, so is this compensation cess on all goods or only on the notified goods? Only on the notified goods. Should we remember those notified goods? Not required. You don't have to remember those notified goods, etc. and all. If this is given in the question itself, if they give GST rate 28%, rates and all will be given in the question. You don't have to remember the rates, unless otherwise it is like some compensation, like composition scheme or some other rates, whichever I tell, those rates only you remember. But otherwise, the regular rates of GST or the compensation cess rates, you don't have to remember, it will be given in the question. In the question, if the compensation cess is given, you do the computation, otherwise not required. Okay. So what are the examples of the notified goods? Just for knowledge sake. So this automobiles, like I told you, motor vehicles, and even on pan masala, tobacco and tobacco products, coal, aerated waters. Aerated waters is basically raw material for the beverage industry. All this sodas industries is there na, Coca-Cola or Pepsi companies, etc. For that, the raw material is this aerated waters. On that aerated waters also compensation cess is there. Computation, actually this cess is not on tax. This cess is on value. And while determining the value, whether we need to add GST and then compute the compensation cess? No. On what GST is computed, compensation cess is also computed on the same amount. And input tax credit. Can we take credit of this compensation cess? Yes, we can. But remember, basically there is something called as utilization of ITC. Availment and utilization of ITC. What is meaning of availment of ITC? Taking credit. Yesterday I told you about input tax credit. In that input tax credit discussion, I told you input tax credit concept is simple. The tax paid on inward supplies will be availed as ITC and utilized for payment of GST on outward supplies. Now, what is the meaning of availment of ITC? Taking credit. Where in our books? No, not in our books. In GSTR 3B. So there is a return which a registered person is required to file called as GSTR 3B. So in our GSTR 3B, so there is a table number 4. So in 3B, table number 4 contains ITC information. GSTR 3B is a consolidated return which is required to be filed by a registered person. In that GSTR 3B, we have various tables. Table 3.1 and 3.2 talks about the liability. How much is the gross GST payable on our outward supplies? Whereas table number 4 talks about eligible ITC. In this eligible ITC, how much is the ITC on our inward supplies? We need to report. We need to enter. But whatever data that you enter here is based on your GSTR 2B. You understood? If you are entering an amount which is beyond GSTR 2B, you will get an error message like this. The input tax credit values have been auto-populated based on 2B. Kindly ensure that the values entered by you are correct before proceeding. But my question to you, as you have done article shape and all, can I take an ITC in 3B? Can I enter a number in 3B which is more than my 2B? Yes? Yes or no? Yes. Error message will come, but I can still take the excess ITC. Why will I be able to take excess ITC? Because the law says that not the matched ITC that we need to avail. We can avail the self-assessed ITC. So what is the difference between matched ITC and self-assessed ITC? We will learn in input tax credit chapter. So because of certain reasons, we can take the excess ITC also. Okay. Example for that is like it pertains to previous month. I have not taken in that month. Can I take it now? Yes. It may not be reported in this month to be, but it pertains to the earlier month. So I can take. Sometimes I will reverse the ITC. Because I would have excess availed, I would have reversed. And again I will be re-availing. This may not come in 2B, but still I will be able to take. Then RCM. Whenever I pay tax under reverse charge mechanism. Like this, there are some reasons. We don't have to go deep into it. But because of which I can take the ITC. So whatever I enter in this 3B table 4 is known as availment of ITC. So where we do availment of ITC? In 3B. Again, where we do utilization of ITC? In 3B only. Set off also we will do in 3B. Once we proceed to payment. So after entering all these details, we need to click on proceed to payment. So in this proceed to payment, once we click, so one table will come. In this table, so we need to see what is our liability, how much is the ITC available, and that ITC we can do the set off with respect to our liability. This is known as utilization. Okay. And with respect to utilization, there are certain restrictions. So what are those restrictions with respect to utilization? Let's try to understand this first, and then I will show you in which page this information is in. But please listen to this. Right now we are discussing the manner of utilization. Manner of utilization. This information related to the manner of utilization is given in section 49, 49A and 49B of CGST Act. Okay, the manner of utilization is given in that place. In that it says, say you have some inward supplies. You have some inward supplies, and on these inward supplies there is some CGST credit, SGST credit, then UTGST credit, and then IGST credit. These on our inward supply. And with respect to outward supply, CGST payable, SGST payable, UTGST payable, and IGST payable. Can I use CGST credit for payment of CGST liability? Yes, there is no restriction with respect to that. I can use. Can I use CGST credit for SGST payable? No. UTGST payable? No. IGST payable? Yes. Same way SGST credit cannot be used for CGST and UTGST, but can be used for payment of SGST and IGST. UTGST credit cannot be used for CGST and SGST, but can be used for payment of UTGST and IGST. But with respect to IGST, so there is no restriction. IGST credit can be utilized for payment of any GST liability. So the first principle that you need to remember here is that IGST credit can be utilized for payment of any GST liability, and any GST credit can be utilized for payment of IGST liability. There is no restriction. Okay. But with respect to the other three, respective credits can be utilized only for payment of respective liability, and cross utilization is not possible. This is the first principle you need to remember. So 2 points in the first principle. What is the first point? There is no restriction on IGST. What does it mean? IGST credit can be utilized for payment of any GST liability, and any GST credit can be utilized for payment of IGST liability. But with respect to the other three, cross utilization not possible. Respective credit can be utilized only for payment of respective liability. Okay. And then there is something called as order of utilization. So this principles related to availment and utilization of ITC is in input tax credit chapter. So you can just check same this volume only. Look into page number 381. Page 381. Page numbers don't look into the footer, look into the header. Actually header is only the correct page numbers. Okay. Footer page numbers I gave for my reference. Page 381. So this is the section that we were discussing. Sir, why are you jumping into input tax credit chapter? See, this is basic, that is required when we are discussing other aspects, for that reason only. Okay. So but you don't have to prepare in the way in which I am taking the class. You prepare normally, but this is for understanding purpose, because there is something related to ITC on compensations. That's why I have been discussing this with you. So manner of utilization of credit, section 4949A. So this is the BARAC portion related to that. So below that I have given the principle. What is the first principle? There is no restriction with respect to IGST. So any GST credit can be utilized for payment of IGST liability, and IGST credit can be utilized for payment of any GST liability. And with respect to other credits, respective credit can be utilized for payment of respective liability, and cross utilization is not allowed. And there is a priority or the order of utilization. Now listen, I have IGST credit. I should use it first for payment of what? IGST liability. Then for payment of what? CGST, SGST or UTGST in any manner, any proportion. Whatever you said now to me was the information which you learnt at interlevel. Okay. Thereafter an amendment has happened. One rule 88A they have brought, which says that IGST credit will be first utilized for payment of IGST. Thereafter between CGST, SGST and UTGST, there is no priority. I can distribute it between that in any manner, any proportion, 20, 80, 50, 50 or 100% for CGST, 100% for SGST, there is no priority in that. Then, with respect to CGST, SGST credit and UTGST credit, what is the priority? First for CGST and then for IGST. Same way, SGST credit first for SGST, then for IGST. UTGST also, first for UTGST liability and then for IGST liability. So this is the second principle, that is priority. IGST credit first for IGST, thereafter CGST, SGST, UTGST, any manner, any proportion, but all three other credits first for payment of CGST, SGST, UTGST respective liability, then for IGST. Then third principle, now which credit I need to exhaust first if I have all the credits? I have all the credits, which credit I need to exhaust first? IGST credit. Why IGST credit I need to exhaust first? That was connected to the discussion today we made, IGST settlement. I am making sale to you. You took IGST credit. Right now this amount is with the central government as a suspense. They cannot distribute to anyone. Why they cannot distribute to anyone? It's a B2B transaction. What I told you, how you are going to use the IGST credit, like that the money will flow, correct or not? So they are telling, first boss, you utilize the IGST credit. Because if you are utilizing IGST credit for CGST liability, fully we can transfer that money to central government treasury. Suppose if you are using IGST credit for SGST liability, we can transfer it to the state government. Otherwise, it will be in a suspense. That's why the third principle, IGST credit should be utilized and exhausted fully before utilizing CGST, SGST credit. That's the third principle. Before utilizing CGST and SGST credit, credit of IGST should be completely exhausted, and order of utilization of IGST credit as specified in principle 1. Then, for payment of IGST liability, last principle is that I have all the credits but only one liability, that is IGST liability. First I need to use IGST credit, that's the third principle we saw. Then which credit? CGST, and then SGST or UTGST. What is the difference between second principle and the fourth principle? In the second principle, I have one credit but multiple liabilities, correct? One credit, IGST credit, but multiple liabilities. So first IGST, then CGST, SGST, UTGST in any manner, any proportion. But in the fourth principle, what I have is this multiple credits, but only one liability, that is IGST payable. Understood the difference? So here, first IGST credit, then CGST credit, and then SGST or UTGST credit. Usually, I will be telling to the students to remember this in a easy way. So for example, I am IGST, my wife is CGST, and my parents are SGST or UTGST. So I will adjust with my wife will adjust with me. I will adjust with my parents and my parents will adjust with me. But my wife will not adjust with my parents will not adjust with my wife. That is the family law, correct or not? So in-laws always there will be a problem, and that is what IGST can be adjusted with CGST, CGST can be adjusted with IGST. Then IGST can be adjusted against SGST, UTGST, SGST, UTGST can be adjusted with IGST, but CGST cannot be adjusted against SGST or UTGST, SGST, UTGST cannot be adjusted with CGST. Done? Then next, so usually what happens is that, whenever I have to spend money, always people are selfish. So first I will spend for myself, correct or not? Then thereafter, should I give priority to wife and parents? No, bad that is, correct? I should not give any priority. Everyone is equal. So IGST credit first for IGST liability. Thereafter between CGST, SGST, UTGST, in any manner, any proportion, everything is equal. You understood? Then next, same is the case with respect to them also. My wife also will try to think about herself only first, then only myself, correct or not? I will come into the picture. So CGST credit first, CGST liability, then only if anything left, catch, like that IGST liability. You understood? Then another principle. So usually, in home, I will be keeping my wallet near the TV. So one milk person will come. So when he is coming, so monthly we have to pay milk, then this water can, like that. Every time she will take money from my wallet only. Okay. So why? She is also having money, but she will not spend. So which credit should be exhausted fully? IGST credit. Thereafter, if nothing is there, then only CGST credit and SGST credit. So which credit we need to exhaust first? One male will be there in the family. So let's vacate his complete purse, and thereafter we think about other things. Then next thing. Now say I have to spend something. Okay. So I need to spend something. I have a problem. I need to spend. First I will think of whatever money that I have, funds I have. Suppose if that is over, then I will ask my wife. Usually that's what every person will do. So I will ask my wife, and thereafter only I will go to my parents. Am I right? So IGST liability first, IGST credit, then CGST, and thereafter SGST or UTGST. Clear? So this may look childish only, but this is actually an example to remember. Okay, so not that reality like this it will happen. For the example sake I told you. Okay, so don't think like no, sir is telling all these things and all, and exceptions will always be there. Okay, so for remembering these 4 principles I told you. So tell me, what are the 4 principles that you need to remember for section 49? Come on, first principle. Don't see. அப்பா இவ்வளோ கதற கத்துறேன், அப்படியே புக்கு பார்த்து சொல்லு. Close your books. Tell, what is the first principle? No restriction with respect to IGST. Second point, cross utilization between CGST, SGST, UTGST not possible. So respective credit for respective liability. Good. Second principle, priority. IGST credit first for, thereafter CGST, SGST or UTGST, any manner, any proportion. What about other credits? First for its liability, then for IGST. Good. Third principle, which credit to be exhausted first? IGST, then only CGST, SGST, etc. Then last, fourth principle, I have IGST liability and all the credits. Which credit first? Second? Thereafter? Okay. In this entire discussion, compensation cess did not come. What about compensation cess? Compensation cess credit can be utilized only for payment of compensation cess, cannot be utilized for IGST also. Same way, IGST credit cannot be utilized for compensation cess. So compensation cess is like completely outside the family. Okay, no way connected to family, some person external to the family. You understood or not? So compensation cess can be utilized only for payment of compensation cess. Now example, I am a car dealer. I am buying a car from a manufacturer. So definitely he will charge me compensation cess. And when I am selling the car to a buyer, say you are the buyer, I am selling the car, I will charge compensation cess from you. Now I can set off. What if I don't have compensation cess in my liability? In my liability, I don't have compensation cess. Now, can I take credit of the compensation cess? No. Example, I am a person into the business of transportation of passengers. I buy a car. When I buy a car, I pay compensation cess. But on the transportation of passengers, there is no compensation cess. Are you getting this? Generally, motor car is blocked credit. But a person who is in the business of transportation of passengers can take ITC on the car. Can I take ITC of the CGST, SGST? Yes. Can I take ITC of compensation cess? No. Why? Why I cannot take? Because in my outward supply, I don't have compensation cess. Understood? So compensation cess can be utilized only for payment of compensation cess. Okay, so you just write down that information here. In the same page number 381. So below this principle number 1 itself, you write down compensation cess paid on inward supply compensation cess paid on inward supply can be utilized only for payment of compensation cess on outward supply. Compensation cess paid on inward supply can be utilized only for payment of compensation cess on outward supply. So where is this information given? Is it given in section 49? No, it's not given in section 49. It is given in the separate law, that is GST Compensation to States Act 2017, but I just connected it there related to the manner of utilization. So please come back to this page. So we were discussing about compensation cess now, come back to this page. That is page number 15. Then applicability for all notified goods supplied by any supplier, GST compensation cess is applicable, but for a person who is opting for composition scheme, in GST there is something called as composition scheme. Rather than paying tax at the regular rates, a person opting for composition scheme will be paying tax at the reduced rates. So that's a special scheme available to some small taxpayers. So this composition scheme, taxpayers will pay tax like 1%, 5% and 6%, like this they will be paying. For them, compensation cess is not applicable. So I am a dealer who is covered under composition scheme, and whenever I am selling aerated waters, actually on aerated waters there is compensation cess. Just now we saw on aerated waters there is compensation cess. Now I am a dealer under composition scheme. I am selling aerated waters. Now will I charge compensation cess to my customer, or I will not charge compensation cess? I will not charge compensation cess. Please remember, all taxable persons supplying the notified goods except composition taxpayer should collect and pay the GST cess. Now in your mind one doubt would have started. Sir, a person who is selling aerated waters cannot opt for composition scheme, sir. We studied in Inter. That is, a manufacturer of aerated waters cannot opt for composition scheme, but a trader of aerated waters can opt for composition scheme. Okay. So don't worry about that. Whatever example I said is correct only. Okay. Then, how this compensation cess works, that is like they collected compensation cess, how they are going to give it as a compensation to the states. So that we will see with an example just to understand how it works. Say Tamil Nadu is the state. Next page you see, Tamil Nadu is the state, and 2015-16 is taken as the base year. Whatever revenue that Tamil Nadu government was earning in 15-16 from indirect taxes will be taken as the base year revenue, 800. From 15-16 base year revenue, a growth rate of 14% is given. So 800 crores plus 14%, so that is 912 crores plus 14%, 1040 plus 14%, 1185 plus 14%, 1351. This is the projected tax revenue or the expected tax revenue. And what is the deficit here? Projected or estimated tax revenue minus actual tax revenue. That's the difference, or that is the compensation to be paid. Okay. But compensation starts from which period? 17-18. That to July. Correct. So you take July onwards in 17-18. How many months? 9 months. So projected is 1040 for 17-18 into 9 by 12, 780 crores. Whereas actual revenue also accordingly you take for 9 months, that is 750 crores. So what is the projected? 780. How much is the actual? 750. What is the difference? 30. That 30 crores will be given as a compensation by CG to Tamil Nadu. Next year 18-19, projected is 1185 but actually is 1240. Will there be any compensation given? No. Will they take anything? No. It is not MAT credit. Okay. So it is like we gave last year, so this year we will take. No, states will not agree for that. Okay. So they will not give. Again 1920, what is projected 1351 and actually is 1314. So yes, compensation will be given. Okay. What are the few points that we need to understand from this? How to calculate the compensation payable? Projected revenue minus actual revenue. And what will be taken as the base year? 2015-16. And what will be considered as the growth rate to the actual revenue? 14%. These are key points that we need to know. So that is only this step 1 and step 2. Okay. So with this we completed introduction to GST. And from CA final exam point of view, this introduction to GST will not be tested because it is not given as a chapter, it is given as an appendix. But you should be knowing few points in this, maybe somewhere in MCQ or else it may be useful. And as some of the students are also appearing for CMA final, so because some of the students here are appearing for CMA final and in online also, so they asked me as to like what are the topics which are applicable for us, sir, because we are attending your classes. Same portion, whatever is there for CA final, the same portion is applicable for CMA final also. Maybe if you are writing CMA final also, it will be useful for you. Same portion, but few chapters are not there for CMA final. So just I will take 5 minutes time for their sake, just to tell what are the chapters which are not applicable for them. So anyhow, before starting that chapter, I will tell that is not applicable. So if you are exclusively attending for CMA final, don't attend the class. Okay. So in this, so introduction, supply, levy and collection, exemptions, time of supply, place of supply, value of supply, input tax rate, composition scheme, everything is applicable. So volume 1 fully applicable. And in volume 2, this invoice, debit notes and credit notes is not applicable for CMA final. So this is only for CA final. Registration chapter also not there. This is only for CA final. For CMA final it is not there. They removed it as per 2022 syllabus. And payment process, returns, accounts and records, refunds, assessment, all this is there. Ethics and other provisions is there only for CA final. For CMA final it is not there. So except 3 chapters, everything else in GST is applicable for CMA final. Then in volume 3, as they have at intermediate level itself this taxable event and all these things, this is not for CMA final, these first 3 chapters, but all other chapters are applicable, plus 2 extra chapters are there, that is duty drawback and SEZ provisions. And that after completion of this batch I will be taking for you, those 2 chapters. Okay. So these are the things, and before starting the chapter I will tell, don't worry, but up to volume 1 same portion. Okay. And the level of questions compared to CA final, the intensity will be less. So it's not that difficult questions that they will be testing at CMA final, but when you prepare this, that will become easy for you. Okay. Fine. And we are now moving on to the discussion where we stopped in the middle related to input tax credit. So please take that, we will complete that, and then we will start with segment 2, that is supply. What's the page number? 381. So look into illustration 1 there, it's a simple illustration. Compute net GST payable, page 382, there is an illustration on utilization of credit with respect to the discussion what we have made so far. Look into illustration 1, compute net GST payable from the following data. Particulars, CGST, SGST and IGST. Gross liability 20,000, 20,000 and 10,000. GST paid on inward supply 25,000. So which credit we have? IGST credit. can we use this IGST credit for payment of all the 3 years? But which one we need to use first? IGST. So still we have 15,000. What we can do with that 15,000? Either we can use it for CGST, or we can use it for SGST, or we can use it for both. So alternative answers exist. Anyway you can do. But whichever answer you are getting in exam, that may not be the suggested answer, because they may follow, because there are multiple options possible. What they do in exam is that they may fully set off for CGST, but what you would have done is that you would have distributed it between CGST and SGST. Then in that case, are we going to lose marks? No, we are not going to lose marks. So we will get the full marks, don't worry. But only thing, one extra thing that you need to do, put a column in the last total. So because here in this case, what should be the net GST payable, total net GST payable? 20 plus 20 plus 10, 50 minus 25. How much? The net GST should be 25. That is the correct answer. So you may have different answers for the column wise, but the final column, the total column will be 25,000 only, so that you will be given marks. Don't worry about that. Just the presentation, one more column you need to add extra. Okay. So please make note of the answer related to this in your notebook. Answer to illustration 1, and as I told you already in the last class, so please give the page numbers to your notebook and update those page numbers of your notebook in the text. Okay. So in order to locate where the answers for these questions are. Answer to illustration 1. What's the page number? Page 382, no? I am just writing for reference. Now, quickly we will complete this. First we have particulars, CGST, SGST, IGST and total. What is the gross GST payable? See the question, 20, 20, 10 and total 50,000 minus IGST credit utilized. What is the IGST credit that we have? 25,000. Now the 25,000, first 10,000 you mention in IGST column and put the number 1, and then remaining 15 anyway you can do. But what I am doing is that I am distributing it between CGST and SGST, but you can do other way also. And the net GST payable, so for presentation purpose only I made you write this. This is how you need to present. But this will not be a question in exam and all, just one adjustment. In that 14 marks question you have na, definitely this adjustment will be there. Okay, the last adjustment that you do will be this. And 12,500, 12,500 and IGST 0. So total will be 25,000. After writing this, you also write in the exam, note alternative answers exist, because not everyone who is evaluating your answer sheet is knowledgeable enough. Okay, so keep that in mind. Sometimes their frustration and all they will show in the answer sheet, on your answer sheet. He will have some issue with his wife, that and all he will show in the answer sheet, because of which he will not give marks. Stupid fellows here. Definitely no, kumbi pakam only for them in hell, you want. So alternative answers exist, but total of net GST payable is 25,000. No, why I said that, because like last attempt, November 23, lot of students have shared their evaluated answer sheets with me. This verified copies will be there, na. Are here they are not giving marks here. So step marks like that, circle they are putting, and they are not giving step marks. And answer is correct, and they are not giving 1 mark also for that answer. And one student actually he failed in group 2. And tax, indirect tax, he got 58, and he shared me his answer sheet asking, sir, this question I need to get 2 marks, 4 marks question. Everything is correct. If I get 2 marks, I will get exemption, sir, so that I don't have to write the indirect tax paper again. See, that's unfortunate that not every paper they will be clearing. But 58, 2 marks, 60, they don't have to write now. Unnecessarily, why again they have to prepare? The problem is November 23 to May 24, again they need to learn lot of amendments. If it is May 24 to November 24 also, okay, not much change. But November 23 to May 24, a huge change will be there. And his problem is that I saw the answer sheet. Yes, really, not just 2 marks, 4 marks can be given. Not only for that answer, in another place also. And I said, yes, you should be getting. And sir, I will apply re-evaluation, etc. I don't know, ICI will be giving 1 mark extra also. I have never heard of, like in re-evaluation, they will be giving marks and all. What kind of sadist morons, no, who are correcting it? 58 marks is there. You again check once. Maybe 2 marks if you give. So he will be saving time in preparing for one subject, na. So stupid idiots here. What to do? So you be careful, that's what I can say. So to the extent possible, in the answer sheet, you write everything, and people will be telling handwriting and all is not important. Did you hear that statement? Handwriting is not important and all. Don't believe. Don't believe. Handwriting is important. Okay. So because already physical paper they are not seeing. They are seeing your scanned paper. So your handwriting itself is like that, means the moment they scan and upload and send, no, if their monitor has issues also, they will not be able to see and understand what you have written. Okay. So they stopped physical papers now. It is only the scanned papers. So due to that reason, try to maintain the handwriting. If required, leave 1 line gap and write. It's okay. If your handwriting is not that great, one line gap you leave and write. Anyhow, you cannot fill the answer booklet and all. That many pages they will be giving. If required also, extra additionals they give. Don't save money for ICI. Already they are earning crores and crores. Every 6 months donation also they are getting in the form of exam fees. You understood? So therefore, you don't have to save money for them. You just ensure that 1 line gap you are giving and writing, because they need to understand properly. That's why. And you ensure that you are writing this. Wherever there is a possibility of alternative answers, you write. Alternative answers exist, but the total of net GST payable is 25,000. Then look into second illustration. Compute net GST payable from the following data: CGST, SGST and IGST. GST payable on outward supply 20, 20 and 10. And we have CGST, SGST credit. So it's a simple question. What we should do? CGST credit, SGST credit, we need to adjust with liability, and extra we have. So that extra we will use it for IGST. So it's a simple one. Answer to illustration 2. Particulars, CGST, SGST, IGST total. For computation of net GST payable alone, you please add one extra column, that is total. Gross GST payable. How much is that? 20? 20 and 10. 50,000 minus CGST credit utilized. So 20,000 we use for CGST, and extra 2,000 what we have is for IGST. 22,000. Then SGST credit utilized 20,000, and then 2,000, 22,000. So net GST payable, net GST payable 0, 0 and 6,000. There is no alternative answer for this. This is the only answer. So look into illustration 3. If you have done with this, look into illustration 3. In illustration 3, compute the net GST payable from the following data: 20,000, 20,000, GST paid on inward supply 10, 10 and 10. So which credit we need to exhaust first? We don't have IGST liability, so only IGST credit is there. So IGST credit we need to utilize first. So again here alternative answers exist. 10,000 can be used fully for CGST, or 10,000 can be used for SGST, or 10,000 can be used partly for CGST and partly for SGST. So anyway you can do, but the total, the final answer should be 10,000. How the final answer? 10,000, 20 plus 20, 40, and 10, 10, 10, 10, 30. So 40 minus 30, 10,000 should be the final answer. So write down particulars, CGST, SGST, IGST, total, gross GST payable. So what is the gross GST payable there? CGST 20, SGST 20, 0, so total 40, and we need to utilize IGST credit. IGST credit utilized 10,000. So I am using 5,000 for CGST and 5,000 for SGST. And then CGST credit utilized. So how much is the CGST credit? 10,000 minus SGST credit utilized. So 10,000 and net GST payable 5,000, 5,000, 10,000. So you may get 0, 10,000, 10,000, 0, 10,000, 0, or you may get 10,000, 0, 0 also. So alternative answers are there, because we can use fully for CGST the credit what we have as IGST credit. So note alternative answers exist, but total of net GST payable is 10,000. Look into illustration 4. So in illustration 4, what happened is that we have all the credits and all the liabilities. So I have to use which credit first? IGST credit. So this 10,000 I am using for payment of 5,000. Still, what is the amount that I have? 5,000. Can I use that 5,000 fully for CGST? No, I should not do that. What will happen if I do that way? Say 10,000 I have utilized 5,000. and remaining 5,000 I have utilized for CGST. Let's assume this scenario. Now what will happen? CGST will become 0 and SGST will be 3,000. Why 3,000? SGST credit I can use for SGST liability, but the CGST credit I cannot use for SGST liability. So that will be carried forward. The CGST credit will be carried forward and IGST will become 0. So the net GST payable will become 3,000. But actually what is the correct answer? 1,000. How 1,000? You see the total of gross liability 15. What is the total of the ITC? 14. 15 minus 14, 1,000 should be the answer. But here 3,000 will come as the answer. So therefore this is not correct. It's like I am paying 3,000 and carry forwarding 2,000. Effectively if the 2,000 I can utilize means, so the net liability or the cash outflow will become only 1,000 na. So therefore what should I do is that I should not spend more than 3,000 for CGST. Why I should not spend more than 3,000 for CGST? Because already CGST credit is 2,000. So don't spend more than 3,000 for CGST, and either I can give 3,000 for CGST, 2,000 for SGST, or I can give 2,000 for CGST, 3,000 for SGST, or I can do equally 2,525 for CGST and SGST. Anyway I can do, okay. And it is preferable to divide it equally because liability is equal, ITC is equal, so distribute the credit, IGST credit also equally between this, so that will be easy, so that your net liability will become 1,000, okay. So let's work on that. Particulars, CGST, SGST, IGST and total. Gross GST payable. CGST is 5,000, SGST 5,000, IGST 5,000, so total 15,000 minus IGST credit utilized. So we have an IGST credit of how much? 10,000. So first I am utilizing for payment of IGST liability, then I am distributing equally between CGST and SGST, then CGST credit utilized, how much? 2,000, then SGST credit utilized 2,000. So my net GST payable will be 500 and 500. Even you may get an answer as 0, 1,000, 0 or 1,000, 0, 0. Okay, 500, 500, 0. So the total will be 1,000. Note: alternative answers exist, but the total of net GST payable is 1,000. Then, so look into the next illustration. So in that we have the transactions, and in the transactions we need to identify what is the nature of supply, whether it is intra or inter. Accordingly we determine whether it is CGST, SGST or IGST. So look into that question. Braincom Private Limited, a manufacturer of laptops in Gujarat, manufactured and sold 1,000 2-in-1 laptops Flexi for the month of August 2021 to their distributor Messrs. Jain Computers in Tamil Nadu at 30,000 each. Generally, the place of supply we will be learning, but I am just telling you usual provisions or the general provisions for place of supply is that In case of goods, ending point will be taken as a place of supply. In case of services, location of recipient will be taken as a place of supply. This is the general provisions. But we have some specific provisions also, depending upon the transaction. But in the absence of specific provision, the general provisions will prevail. And as per the general provisions, for goods, what should be taken as a place of supply? Ending point. For services, what will be the place of supply? Location of recipient. This transaction is related to goods. So they are selling computers. So goods, what is the ending point? Tamil Nadu. What is the location of supplier? Gujarat. Braincom. Okay. You are computing net GST payable of Braincom. So you step into the shoes of Braincom. Where is the supplier? Where are you located? Gujarat. And what is the ending point of the goods that you are selling? Tamil Nadu. So it is a interstate supply. Interstate supply means what is the liability? IGST liability. Okay. So now go to the table below. I have given the format. Just update there itself. So in IGST column, you need to update gross GST payable. So how many laptops? 1000 laptops. Correct. And what is the price of each laptop? 30,000. What is the rate of GST? 28%. So now the mistake what many students are doing, which I have observed, is that they are not writing this workings. If you see the question paper, on the top of the question paper itself, clearly it will be mentioned all workings should form part of answer. Have you seen this? But you will not do that. You will just calculate and final number you will enter in the IGST column. That is wrong. So whatever you put in the calculator, ensure that you are writing in the answer sheet also. That is 1000 into 30,000 into 28%, that will be 84 lakhs. This is the meaning of all working should form part of answer. Means whatever you enter in calculator, ensure that you are writing in the answer sheet. Okay. Then, so we don't have any CGST, SGST liability, because below that we have the inward supply details. Now look into the inward supply details. During the month following inward supplies are registered in the books. Raw material A purchased from a dealer in Tamil Nadu 5 lakhs, GST rate 18%. Now you are Braincom in Gujarat. You are purchasing from a dealer in Tamil Nadu. So is it your intrastate purchase or interstate purchase? Interstate, because location of supplier Tamil Nadu, ending point is Gujarat. Therefore it will be interstate purchase. So which credit? IGST credit. So go there in the template, you update raw material A IGST credit. How much is the IGST credit? What is the value? 5 lakhs. What is the rate of GST? 18%. That will be 90,000. Then raw material B. Raw material B, where you are purchasing from a dealer in Gujarat. So Braincom, your Braincom, Gujarat, you are also making purchase from a dealer in Gujarat. So therefore it is a intrastate. So CGST, SGST credit. But what is the rate of GST? 28%. So we need to divide it between CGST, SGST. So 8 lakhs into 14% and 8 lakhs into 14%. So 8 lakhs into 14%. How much? 1 lakh? 1,12,000. 1,12,000. Then input service. For input service, what will be taken as a place of supply as per general provisions? Services, location of recipient. So input service C, received from a service provider in Gujarat 2 lakhs, rate of GST 18%. Supplier also Gujarat, recipient also Gujarat, so place of supply Gujarat, therefore it is a intrastate supply. So chargeable to what? CGST, SGST. How much is the value? 2 lakhs. What is the rate of GST? 18%. So divide equally, CGST 9%, SGST 9%. So 2 lakhs into 9%, that is 18,000. and here also 2 lakhs into 9%, 18,000. Then input service D from a person in Maharashtra. So supplier Maharashtra, recipient Gujarat. So place of supply Gujarat, therefore it is interstate purchase, interstate inward supply. So which column? IGST column. And what is the rate of GST given? 12%. So 4 lakhs into 12%, 48,000. Then see the next line, compute the net GST payable. That's what we are going to do, considering the fact that balance in electronic credit ledger as 1,30,000 of IGST, and for the purpose of computation assume that no exemption is available to Braincom. So what is the meaning of balance in electronic credit ledger 1,30,000? So means previous months we have some unutilized credit, so that is carried forward to the current month. So electronic credit ledger is a ledger which will be maintained by GST network on behalf of the registered person. So in that electronic credit ledger only the balances of input tax credit will be available. So 1,30,000, which column? Opening balance. IGST column 1,30,000. Now you see what is the total ITC. CGST 1,30,000, SGST 1,30,000, and IGST will be 2,68,000. Now, gross GST payable is 84 lakhs. Which credit you need to use first? IGST credit. Rule 4, principle 4. All credits I have only one liability. So first IGST credit 2,68,000, and then CGST credit 1,30,000, and then SGST credit 1,30,000. So finally 76 lakhs, no 79 lakhs, 78 lakhs, 72,000. So that is the net GST payable. Now you need to write 2 notes in exam, okay. So after completion of this table in the answer sheet, ensure that the 2 notes you are writing, one note is related to the principle that you have applied in the answer, and another note is related to IGST settlement. Usually we forget this because we need to rush to the next question, we forget this, but don't forget this. First note is related to utilization. What is that? IGST for payment of IGST liability. IGST credit should be utilized first, and thereafter CGST credit, and then SGST credit. As per which section? Section 49. Section 49. At least remember section 49, even if you are not remembering A, B, C, etc. Section 49. Okay. Should we remember section numbers, sir? Of course, yes. You should remember the section numbers. And see, inter, okay, fine. As per the provisions of CGST Act, like that you have written. That's fine. But at final level, you should definitely remember the section numbers, and you need to quote the section numbers at the appropriate places. See, you need that extra marks, right? You know, everyone will write answers, everyone will prepare, everyone will write, but where we stand apart from others is these extra things. So section numbers ensure that you are remembering and you are writing, and even the presentation should be good. That's why I am just showing you like how to present it. So the first note you can read as per section 49, for payment of IGST liability, first IGST credit should be utilized, and then CGST credit, and thereafter SGST credit. And the second note is related to IGST settlement. Check whether there is IGST settlement in this place. Are we using SGST credit against IGST liability, or IGST credit against SGST liability? Are we doing that? Interchange, yes. Which credit we are using for what liability? SGST credit is utilized for IGST liability. Therefore, who should pay to whom? State government of Gujarat should pay how much? How much utilized? 1,30,000 to central government under IGST settlement. See the second note. As SGST credit is utilized for payment of IGST liability, state government of Gujarat shall pay 1,30,000 to central government under IGST settlement. Done. Next, look into the second question. Yesterday, I was discussing with you on import. What are the usual taxes or duties that we pay on import of goods? You are importing goods. Import of goods is actually a subject matter of customs. So as per customs, we need to pay three things usually. What are they? Basic customs duty, IGST and social welfare surcharge. Even though IGST is levied under Customs Act, this IGST is not levied under GST law, is levied under Customs Act, but that IGST can be taken as credit. So if you look into this input tax credit table 4, in that you can find IGST credit on imports. So that separately we need to mention. Say this. Import of goods. Can you see the first line? Table 4A, first one, 4A1. Import of goods. Integrated tax. Only IGST, because we don't have CGST, SGST on import. Only IGST. So that we need to mention separately. Now this, they will verify with the customs database. Customs, there is something called as ICE gate. Like how GST we have a portal called as gst.gov.in. So for customs there is a common portal called as ICE gate, ICE gate, Indian Customs Electronic Gateway, icegate.gov.in. There we will file a bill of entry for importing the goods. In that bill of entry, we will mention how much is the value of the goods, how much is the basic customs duty, how much is the IGST and social welfare surcharge. And in the bill of entry, we also give our GSTIN. Are you understanding this? So based on the bill of entry GSTIN, so ICE gate will push the data to GST portal. So this data will be reflected in our 2B. In our 2B, how much customs duty we paid will not come, but how much IGST we paid on import will come, and automatically we can take that as credit, which means out of basic customs duty, social welfare surcharge and IGST, which can be taken as credit? IGST can be taken as credit. And can that be utilized for payment of our liability? Yes, we can. So this question is related to that. Look into second question. Go Noise LLP, an importer of smartwatches located in Indore, Madhya Pradesh, has imported 10,000 smartwatches from China, and the sales made during various dates in April 2021 is as follows. So different dates, number of units, location of buyer, sale price is given. So the first sale, see, first is importing and then selling. So the first sale is what, within the state or interstate? Interstate. What is the ending point? Tamil Nadu, na? Where is the supplier located? Go Noise, Madhya Pradesh. So therefore location of supplier Madhya Pradesh, place of supply Tamil Nadu, therefore it is interstate. So which column? IGST column. Kindly update there. 2000 into 4200 into 28%. It is given below. The applicable rate of GST on smartwatches is 28%. So gross GST payable 2000 into 4200 into 28%. How much? Indirect tax is a practical paper. Okay. A calculator you should bring. It's required. 23,52,000. Then next 18th April, 3,000 units sold in Madhya Pradesh at 3,500 per unit. Is it intra or inter? Intra, within the state. So therefore CGST, SGST, update in the respective place. 3,000 into 3,500, 3,000 into 3,500 into 14%. 14,70,000. 14,70,000. Then 26/4/2021 CGST, SGST, IGST. So it is which transaction? Interstate again, Karnataka. Ending point is Karnataka. Therefore, IGST liability 4,000 into 4,000 into 28%. 44,80,000. So subtotal A, CGST 14,70,000, SGST 14,70,000 and IGST 44,80,000 plus 23,52,000. 68,32,000. Then continue the question. The applicable rate of GST on smartwatch is 28%. The customs duty paid on import of above consignment is as follows. Basic customs duty 30 lakhs. But can that be taken as credit? No. No ITC. No ITC with respect to basic customs duty. IGST on import 92,40,000. Can we take ITC? Yes. And on social welfare surcharge, we cannot take any ITC. So only 92,40,000 can be taken as ITC. So input tax credit on import of goods is 92,40,000. Also, they have received some services from a service provider in Madhya Pradesh for a value of 25 lakhs, GST 18%. So it is intrastate, correct? Check where Go Noise is located, Madhya Pradesh. They are also receiving services within Madhya Pradesh. So it's an intrastate. So 25 lakhs into 9% and 9%. 2,25,000. So input tax credit we got, and computation of net GST payable, gross liability 23,52,000. And first which credit we need to exhaust? Sorry, gross liability 14,70,000, 14,70,000 and 23,52,000. That is our gross liability. Now, which credit we need to exhaust? IGST credit. How much is the IGST credit that we have? Even though all three credits we have, sorry here, 68,32,000. So even though all three credits we have, but which credit we need to exhaust first? IGST credit. So use IGST credit. IGST credit should be utilized first for payment of what? IGST liability. So 68,32,000 I have utilized. Now what is left? 92,40,000 minus 68,32,000, 24,08,000. But don't use fully for CGST. Why? Because already there is some CGST credit. So what I told you, liability equal, credit equal. So equally you distribute. What is the excess credit that you have got? IGST 24,08,000 divided by 2. 12,04,000 you use for CGST and SGST. That's the next line. 12,04,000. 12,04,000. Then respective credit CGST, SGST we can utilize. 2,25,000, 2,25,000. And what is the net GST payable? 41,000, 41,000, 0. Is there a possibility of alternative answers? Yes. But the total of net liability will be 82,000. Because what we can do, we can use CGST and we can make CGST as 0. It depends. Sometimes in question they will say, compute the minimum SGST payable, like that they will ask. Compute the minimum SGST payable. Means what? They want the SGST to become 0. So means more credit you need to use for SGST and ensure that it will become 0, and remaining you can use it for payment of CGST. You understood? So notes to above see that as per section 49, credit shall be utilized fully before IGST credit shall be utilized fully before utilizing CGST, SGST. Also as per rule 88A, IGST credit can be utilized for payment of CGST, SGST in any manner. And is there a IGST settlement here? Yes. Which credit we are utilizing? IGST credit we are utilizing for payment of SGST liability. So who should pay to whom? Central government should pay that amount to state government under IGST settlement. Okay. Done? Then look into third question. So before moving on to the third question, I want to ask you one general knowledge related to GST. Practically you might have experienced this. So usually in relation to accommodation, hotel accommodation or any service in relation to immobile property, the location of immobile property will be taken as the place of supply. That's a specific provision we have. Say you are a chartered accountant in Tamil Nadu. You got an outstation audit and you went to Hyderabad. Hyderabad is the outstation audit, so you went there and you will stay in a hotel there. Now for this hotel accommodation, what is the location of supplier? Hyderabad. What is the place of supply? Hyderabad, because the place of supply in case of immobile property or accommodation service is the location of immobile property, so it will be Hyderabad. So the supplier will raise IGST invoice or CGST, SGST invoice? CGST, SGST invoice, correct? Now you are located in Tamil Nadu. He raised CGST, SGST invoice and it's a B2C transaction. So he reports it in GSTR 1. Who? The hotel owner will report it in GSTR 1. Can he report it in GSTR 1 by mentioning your GSTIN and making it as intra-state supply? Possible or not possible? You understood my question? Again I am repeating. Supplier in Hyderabad. Place of supply also Hyderabad. So it's a intra-state supply. But recipient is in other state. So when recipient is in other state, he want to raise a B2B invoice. So in GSTR 1 we add the invoice. When we add the invoice, we will mention the recipient GSTIN. Correct? And then we need to pay the liability. And there itself it will come whether it is CGST, SGST or IGST. Now I want CGST, SGST. But the recipient GSTIN is in another state. Automatically the moment when we put the GSTIN of the recipient there, so the recipient first 2 digits is not belonging to this state, means it will automatically take as integrated tax, IGST, correct? But I want CGST, SGST. Why I want CGST, SGST? Because it's an offense if I am making it as an interstate transaction. It's actually intrastate. You cannot just like that classify intrastate as interstate. So as per law, if it is intrastate, it should be intrastate only. You cannot pay IGST and say you need tax only, no, I paid no, like that you cannot say. You understood? Reason, it is going to affect the state revenue. How it is going to affect the state revenue? Boss, you paid interstate IGST, boss. 50% will go to central government. Remaining 50% will go to the consuming state. But if it is CGST, SGST of that state, that SGST will go to the originating state only, na? It will go to Telangana. So they will not agree. SGST department will not agree. They will say, even though you paid IGST, it's okay. You claim a refund. Now you pay CGST, SGST. This is the voice of every state GST department. They will not agree. A number of cases I have seen wherein state GST department is not agreeing. They are telling, okay, correct, you paid. Where we are telling you did not pay. So we will not levy penalty. It's a revenue neutral. We will not levy penalty. We will not levy interest. But you pay CGST, SGST. Okay, and you get the refund. Excess payment of tax IGST, you get the refund. That's your headache. But you need to pay CGST, SGST. How can we do that? So have you experienced this? Like recipient in other state, but I want to show as CGST, SGST. Possible? Yes, the place of supply can be changed. Actually, place of supply, we can scroll and we can see this. So B2B invoice, when you are adding, okay, B2B invoice when you are adding, you will enter the recipient GSTIN. When you enter the recipient GSTIN, basically the first two digits, if it is in a different state, it will take automatically as integrated tax. Now what should I do? I should go to the place of supply. Place of supply is there, it's a drop down. Place of supply is a drop down. In this place of supply, in the drop down, what I need to do? I need to select it as place of supply as Telangana. I am in Telangana, boss. If I mention Tamil Nadu GSTIN, automatically the place of supply will be taken as Tamil Nadu. But I need to change that manually. So to Telangana. Usually in this utilities, when we go for some softwares and utilities, this functionality is not there. You got it? What software will do, it will not understand all these things, it will just push the data into GSTR1. Well, no one is doing manually, na? Everyone is depending on softwares. So there are a lot of plugins which are available. Whichever accounting software you may be using, that plugin will push the data in one click. But we need to go to that invoice, click on edit the invoice, and we need to change this. Otherwise, we are going to unnecessarily face the torture from the state GST department in future. You got it? Understood? Now, I need to change here to Telangana. I am in Telangana. I need to change here to Telangana. So, automatically it will become CGST, SGST. So, as a supplier, my job is done. I am 100% compliant. My job is done. And it will come in 2B, sir. You are 2B, you are a chartered accountant. It will come in your 2B. Of course, yes, because I am mentioning your GSTIN. Na? So it will come in 2B. When the data will come in 2B? Based on GSTR1 of your supplier, it will come in 2B. So it will come in 2B. Now, can you take this as ITC? Is the next question. Can you take this as ITC? So where are you registered? Tamil Nadu. This CGST, SGST paid in which state? Telangana. So the law says CGST, SGST paid in the other state cannot be taken as credit. In your 2B, you know where it will come? So in our 2B, there is something called as ITC not available. ITC available versus ITC not available, like the two columns are there. So this will come under ITC not available. It will come in 2B, but you know where? Not under ITC available, it will come under ITC not available. Why ITC not available? Because you have paid CGST, SGST in the other state where you are not registered. But this is actually a debatable question. Why it's a debatable question? So if you see the law, we can take input tax credit with respect to central tax and state tax. What is central tax? Tax paid under CGST Act. What is state tax? Tax paid under this SGST Act. This SGST Act means whichever state you are registered, that means SGST I cannot take credit, but CGST at least I should take credit. Am I right? Sir, SGST, okay sir, I am not registered, so I will not. But CGST is common, na? I should be able to take, but they are not allowing CGST credit also. So portal is not allowing, even CBIC FAQ has given that we will not get, but legally it is a debatable point. There are many writs which are filed in many high courts related to this particular point, wherein certain high courts gave the judgment in favor, telling that no credit should be given. You understood? So now, if our client is located in a state where the writ judgment is in favor, then definitely we can take CGST credit. But for exam purpose, CGST, SGST paid in the other state cannot be taken. Okay, this is for your exam purpose. First you remember, for exam purpose. For exam purpose, CGST, SGST paid in the other state cannot be taken as credit. So ICI as well as ICMI will follow whatever CBIC says, and they will not mess with this writ petitions etc., because it's not a Supreme Court judgment. If it is a Supreme Court judgment, that will be applicable for your exam. It's not a Supreme Court judgment, it's a High Court judgments. High Court judgments will not have implications in the exam. So due to that reason, for exam purpose, CGST, SGST paid in the other state cannot be taken as credit. But practically, depending upon which state you are located, so CGST portion alone can be taken as credit. So that is not a deviation from the law. But sir, how can I take only CGST as credit the moment in my 3B, okay, if I enter, one second. So yes, the moment if I enter central tax, the same amount will come in state tax. Of course, it will not be matching 2B. That is a different challenge. If it is not matching with 2B, I will get a notice. I need to give reply to that notice, quoting this judgment, etc. and all. That's okay. But another challenge is there while taking itself. If I enter 2000 rupees in central tax column, automatically it gets updated in state tax column. I don't know whether you have seen that. So whatever we enter in central tax column, the same number will come in state tax column also. But I want to take only central tax as credit. So one client asked me this, sir, what can I do? Yes, actually in our state, so there is a judgment quoting that High Court ruling, we want to take the credit of CGST. But when we are entering, we have this issue, what can be done? So for that a solution is there. You first take credit, central tax, state tax. There is something called as reversal. ITC reversal is there. Now reversal means reduction of credit. In that reversal column, you go and mention in the state GST. For example, 9,000, 9,000. Automatically it will come. In the reversal, it is column wise. If you enter in CGST, it will not come in SGST also. So that they have made it column wise. So in SGST column alone, you mention 9,000. So in net ITC available will be CGST alone 9,000 will come. So that I gave as a example in your book also in page 386 you see. In page 386 you see, first we enter 100 rupees in central tax, it will also come in state tax. But in reversal column, only state tax we need to enter 100. So the net ITC available will be 100 only in central tax column. This is for practical purpose. And I have given both view 1. Can the GST paid in other state be availed as ITC? Only CGST credit can be availed. This view is not agreed by CBIC. And for exams, this view cannot be considered. But for your reference, for your knowledge purpose, I gave this. So why CGST credit cannot be taken? I gave the justification below. And next you can see view 2, both CGST and SGST cannot be availed as credit. But this view only you need to follow for exam purpose. Okay? Clear here? Now you look into the question. Grant and Co. Chartered Accountants having registered office in Chennai, Tamil Nadu, rendered services to the tune of 40 lakhs during the month of September 2021. Out of the total value of supply of services during the month, 25 lakhs is interstate, means IGST liability, and the balance is intrastate, means CGST, SGST. The inward supply of services during the month is as follows. Rent to property owner in Chennai, Tamil Nadu. Can we take that as credit? Yes. Where is that person located? Tamil Nadu. Registered in Tamil Nadu. So CGST, SGST paid in Tamil Nadu can be taken as credit, no issue. Software usage charges for a supplier of service in Mumbai, Maharashtra, 36,000 IGST credit can be taken. Hotel accommodation in Delhi, CGST 9000, Delhi SGST 9000. Can we take? No, because where is this Grant and Co registered? Tamil Nadu. But CGST, SGST paid in other state. Can they take it as credit? No, they cannot take it as credit. So both CGST and DGST cannot be taken as credit. Now my question to you. How can they take this credit? If they want to take, is there any way that they can take this credit? Have a registration in Delhi, okay. So Delhi they will take credit, but they don't have liability in Delhi, no. Delhi they will take registration, super. So they will take ITC in Delhi, okay. But no liability in Delhi, liability is in Tamil Nadu. How? Raise invoice in the name of client. Super. So that is one way. That's correct. Actually, that is a correct way. Wherein you don't pay. So you give the client details. So client is in the same state. So they will raise invoice to the client. That is your client. And you ask client only to pay, or if you are paying, you do the reimbursement. But I will not agree to the reimbursement point, because if you do the reimbursement, that will be added to your expenses incurred for the purpose of providing the service, and your value will increase and the GST also will increase. So it's better to put that burden on the client itself. Let client only book the hotel. You understood? Let him pay and let he only book. That's the best thing. Okay. So that we don't have any kind of trouble. If the client says, no, I am already paying you audit fees, so you only incur all those things, you don't come to me, then you will have one person in Delhi, one friend, etc. So you give his GSTIN. So the hotel will raise invoice to him and he will raise invoice to you as consulting service. You understood? So when he raise invoice to you as consulting service, it's a IGST credit. So IGST credit happily you can take. But I don't know whether it is correct or wrong, but that's what lot of people are doing. Okay. So like many times when some faculties are coming from other state to Tamil Nadu for taking classes here. So mainly BB sir and all will be coming here. Now he stopped coming. Previous batch and all he came. So when he came to Chennai for taking some fast track batch here, he stayed in for some 10 days in this Park Hyatt. Okay, he stayed there. And bill you can understand. So per day it will be like some 12,000 like that and all, and GST on that. So what he did, he asked my GSTIN. I gave. He gave it to hotel. Okay. So hotel raised invoice in my name. And thereafter, I raised invoice to BB sir. IGST credit. So I took CGST, SGST credit, IGST liability. Yes, CGST credit, SGST credit can be set off with IGST liability. I don't know whether it is ethical or not, legal or not, but lot of people are doing this to avoid this problem. You understood? Because if the lawmaker says you cannot take credit, because no one is ready to lose their money today. You understood? And why should I leave this 18,000 rupees? Whose father's money? You understood? So they say, like, is it your father's money that you are asking like that? Whose father's money? My father's money only. So therefore, why should I give it to you? So I will only enjoy that benefit. You understood? That's what practically a lot of people are doing. In case when we pay CGST, SGST in the other state. Okay. But in exam, that and all we should not write. Credit not available. Monthly tax online portal subscription 5,400 can be taken. Compute the net GST payable by Grant and Co. considering GST rate applicable to chartered accountants as 18%. This is one computation. Second computation, also what will be your answer if Grant and Co. is having only intrastate supply of services of 40 lakhs and there is no interstate supply of service? That is another computation. This is a homework for you. Already I explained everything. I gave the format below. Just these two formats you update and you see what is the net GST payable. Okay. And tomorrow we'll just discuss the answer and we'll move on to the next chapter. So actually I thought of starting today, but I completed this portion. So tomorrow's class I will start with segment 2, that is supply under GST. Okay. Thank you. We'll meet tomorrow.